If the stock market doesn't rise today, don't blame Josh, blame Donald. In the greatest gift-giving budget of all time, who got precious little? And what company CEOs will be definitely sending Josh a Christmas card this year? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Well, Paul, you'd expect with all that money, what, $213 billion budget deficit, the stock market should roar higher today. But Donald could actually throw a spanner in the works.
Yeah, Donald's good at doing that. I think the Australian headlined it Joshua Spree.
Oh,
I thought that was a good
Joshua
play.
Joshua Spree, well done.
And that's what we got last night. But look, Donald does have a habit of
spoiling parties.
And of course, he's now instructed his team to cease negotiations with the Democrats until after the election. I don't know how
about
long
a stimulus package. We can explain. A stimulus package will actually help all the people who once were on, effectively like our JobKeeper, who are on nothing now, nothing. Donald says, we'll look after you vote me in.
Yeah,
that's a bit crazy,
and
I reckon.
Put in perspective, the Yanks are arguing between 2.4 trillion, which the Dems wanted, and about 1.6 trillion or 1.4 trillion that the Republicans wanted. So it makes Joshua Spree look pretty tame in some ways. But look, I think they might come back to that, Peter, but it was a funny thing. It was almost petulant Donald again. So he's in charge.
And Wall Street went down.
Wall Street went down, and I guess we'll get a wake-up call on the States as a result of that. So our market today will be off a little bit, I think, Peter. Not too bad because they're going to come back to the budget. But
individual companies are clearly going to benefit. They will go high today for sure.
Yeah, we're going to take the lead from the US as we normally do.
Okay, let's go to we didn't get the bell, Thea, but we should have.
That was a new bell ringer today, folks. That's why.
She's far too tolerant. The next one is the greatest gift-giving budget of all time. Who missed out, Paul?
Well, there are a couple of people missed out. Let's start with a couple of
companies. Two people.
Well, first of all, self-funded retirees are going to win, right? And I think
there were no gifts for them.
They got nothing, Peter. Right. Nothing.
Well, I think they got something, but I'll come back to that. But there were no direct gifts.
No direct gifts. I mean, every other Tom, Dick, and Harry got a gift. 11 million taxpayers got a gift. Aged pensioners got a gift.
Small business owners.
Yes, small business owners. Big business owners up to $5 billion in turnover got a gift. I mean, there are lots of gifts out there, but the poor old self-funded retiree and some of the big banks got nothing.
Well, banks never deserve anything. But the bottom line is, I think the self-funded retirees nowadays, term deposits are hopeless. You can't really get much dividends. Dividends are still there, but not as good as they used to be. So getting the stock market to go up is probably the biggest gift that Josh has given self-funded retirees. At the end of the day, their income only grows if the stock market goes up. So in that sense, there's an indirect gift, and that's about all the self-funded retirees can thank Josh for.
I mean, look, it is good for the market. This is really good long-term for banks because all this money sloshing around, it means there's going to be, and a lot of new jobs being created. It's going to mean it's going to be less defaults on loans.
Tax cuts will help that.
Really good for the retailers. I'll tell you someone else who's not good for. It's not good for companies like Link because of the superannuation reforms. You know, you won't automatically get opened a new account by your employer when you start your super. In other words, your employer will be out. If you don't nominate an account, your employer will go to an ATO website and get your account for you. So there's going to be a lot less super accounts. Pressure on the big super fund managers to cut fees because of naming and shaming about performance. So that industry is finally, the gravy train and super is perhaps, I won't say is, but is perhaps coming to an end, Peter. So IOOF, AMP, Link, they're all companies that their MDs won't be sending Josh a Christmas
So that's the
card.
losers. Thea's rang the bell. Let's go to the third one. What company CEOs, you don't have to name the companies, will be sending Josh a card because their companies will do well as a consequence?
I'll name the same, JB Hi-Fi, Harvey Norman, all the
Nick
discretionary retailers, because of all the money that companies will now have to spend with the instant asset write-off and all the other things that are going on. So
Wes Farmers, Office Works, and...
Good for retailers. I mentioned banks, Peter. Obviously, they're construction companies longer term because there's going to be a lot of money on infrastructure and some good stuff where states are going to be sort of have to bid for funds quickly to get it. So that's going to be good for companies like BlueScope and a lot of the construction builders.
Boral, Adelaide Bryan.
A couple of surprise ones. The health insurance companies, they're going to extend. There's a couple of little small reforms that will help private health insurance. for example, allowing the age in which your adult child can stay on your policy now currently is 24 up to 31. So that's going to encourage, well, there's more kids who are still
Redefining children.
Redefining kids. I mean, there are a couple of small reforms that will help private health insurance, not the big ones. So Medibank and NBI will be, well, NBH I should say, will be a little bit of winners. So, but there aren't too many losers. The other thing to look out for is this right back, or effectively companies that made money in the last 2 tax years and are going into a loss situation as a result of COVID this tax year and the next tax year, they'll be able to claim back some of the tax they've paid. So I think there's going to be some small caps that will do all right out of this, or suddenly realise they're going to be several $1 million better off. I can't tell you who they are because you've got to go through the balance sheets to work this out. But there are some winners out there. Okay. There'll be lots of Christmas cards going to Josh.
I tell you what, Thea gets bored easily, doesn't he? Thea gets very bored easily.
Yes, she does. Doesn't like
we told her she'd ring the bell when she gets bored. She's getting bored far too easily. A couple of things I want to throw in. This carryback of losses does not apply to sole traders and partnerships, only for companies. So if you're small business or companies, that's one thing. The second thing I want to throw in...
Sorry, there's a turnover cap of $5 billion as well.
Right. Yeah, but the following thing I want to throw in, 4 companies that rose yesterday, reflecting that I think they're going to do well in a growing economy, were my ZEET stocks. Zip, Elmo Software, EML and Tyro all went up yesterday. Been going up for the last couple of days. It's a good sign that my ZEET stocks are heading in the right direction. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.